To the markets we go. Markets continue to move with a mix of fundamentals, seasonal factors, and outside influences. Joining the broadcast this week to break it all down is Darin Newsom. He is a senior Barchart Analyst. Darin, we appreciate your time as always. I wanted to jump into some news that has been making the headlines this week. Argentina reinstates their grain export tax after $7 billion in sales. That was their cap that was reached. Has that had a pretty big impact on us here domestically?
It's an interesting issue. What it does is it certainly. Let me start from the beginning here. What it does is it supposedly was some sales to China for shipment during the prime time for U.S. The 6 months that U.S. dominates or used to dominate the market. So, in that respect, yes, because what it does is it pushes back any chance of the U.S. having much of an influence on the market. I mean, the U.S. has already been made a secondary player in the global soybean market, and it seems like the goal is now to even possibly remove it from the secondary status as we see more players coming in from South America. You know, what we're seeing here in Argentina, still the world's number one soybean meal exporter, and who knows, maybe Uruguay and others could get in on the game here before too long.
All right, Darin, let's take a look at commodity-specific here. Let's start with corn. The December chart, you take a look at it, really in a sideways pattern since about the first day of September. What's been keeping us range-bound here in corn?
The biggest thing that's going on in corn right now is we know it's harvest time, so we've got enough new supplies coming in to offset what's still pretty decent demand for U.S. corn. So we've got a stabilized market here. We've got, I guess, a market that's reached equilibrium or something like that. But as we look longer term, we see the May July future spread is bullish. So what it's telling us is that there is a more bullish outlook for some supply and demand as we get into next spring or next planting season. And so the investment side of the market can look at this and see it as well. And so it's going to keep some money possibly coming in. So covering short futures positions in the corn market, possibly looking to go long. And this is just working to offset any of the commercial pressure we're seeing tied to the harvest that's going on so far.
Meanwhile, on the soybean front, took a pretty big hit over the past week. What was driving that the beans to the downside?
Biggest thing is, again, there's just really no demand for U.S. soybeans. We've taken ourselves out of the global market. We know it doesn't matter how large the crop is that's coming in, it's going to be plenty. And we can see this not only with the immediate national soybean index continues to drop, but we can look at the Nov Jan March spreads and so on, and see that there's just really no concern right now for U.S. Supply and demand as we head through the next marketing year.
Meanwhile, whenever you're on the program, I'd like to get a question here about wheat for our wheat growers that are joining us today. We look at the futures market, and we're still above the $5 mark, but that's well off some of the highs we saw just a few months ago. Is this kind of a holding pattern place due to the fierce competition across the globe for wheat?
Yeah, I mean, you're absolutely right. I mean, there is a lot of competition around the world for wheat, and we've seen the Chicago contract. I got to go back and look at the Kansas City, but the Chicago, I'm aging myself there. It's soft red winter and hard red winter now. But the soft red winter contract, December issue, has posted new contract lows here this week. So again, there's not any real reason to sell down here, but there's also really no reason to buy. We can see fundamentally U.S. isn't going to be running out of wheat anytime soon. We are seeing a little bit of an uptick in demand based on what we're seeing in weekly export sales and shipments numbers, but it's nothing extraordinary. So yeah, again, this market just really doesn't have much of a reason to do much of anything at all.
You brought up the export sales. I'm going to jump back to corn for a second. We continue to see Mexico be a pretty big buyer of U.S. corn. I think that the reason for that, at least in part, has to do with the fact they're trying to feed out the cattle that are no longer able to be shipped across the border into Texas?
Yeah, that's certainly one of the reasons why, possibly. I mean, we also have the ongoing tariff. Is the U.S. going to put more tariffs on? Are they going to take? They're not. We know we're not going to take it off. Are they going to raise levels? So there's all this nonsense going on. But yes, Mexico still has demand for corn. They're still buying it up as best they can. And so again, as we talked about earlier, there's still solid demand, and it's enough to offset the increase in supplies that we're seeing due to harvest.
All right. Well, as I mentioned, the U.S.-Mexico border is closed to live cattle imports. That's due to New World screwworm. We have that about a week ago. USDA confirmed that was within 70 miles of the border. So an interesting development there on the New World screwworm front. And on the cattle side of the equation, Darin, get your thoughts of what's happening there. Box beef prices continue to slide. Meanwhile, the futures market is holding up decent, I guess, as you compare that to what we're seeing in the cash. Your thoughts on cattle?
Yeah, I'll try to be careful with what I say here, but I don't think we can read much into the boxed beef market because since the US president made his announcement that he was going to lower beef prices, we've all heard this before. The USDA, where we all know the U.S. Ag Secretary is one of the main cheerleaders for the U.S. president, and boxed beef are USDA reported prices only. There's really no science to them. We have not seen an uptick in boxed beef since the president made that announcement. And I find that more than just a little bit curious, given the fact that we haven't seen cash markets actually break, and the feeder index itself continues to move higher. So I do think we have to take the boxed beef market with a grain of salt. We have to look at the cash markets. We can look at futures. Yeah, I mean they could be in a little bit of a concern up here because they seem a little bit overbought, a little top heavy. But on the cash side, we just aren't seeing a big break in the cash markets.
Well, let's get your final thoughts. As we've mentioned multiple times, harvest is underway. Producers making decisions what to do with their grains. What kind of advice do you want to leave us with?
Yeah, we have to. I think that we can be a little bit cautious in here. If we get a chance to sell some soybeans, we certainly can. Particularly if we've got them hedged, we can start rolling them out to the Jan, March, and so on. On the corn side, I know everyone likes to hold the corn, or most people like to hold corn, and so there is that opportunity. I think because the market does act like it wants to go up because of that May-July spread, and we're also starting to look at the at next year's planting season as well, based on the 2026 no soybean corn spread. See where that leads us over the fall and the winter.